is Nancy Leader on the Zeta Report. The years preceding the coming cataclysms will see crop failures in the face of atypical weather and intractable droughts, insurance company failure due to weather and earthquake severity, and a general lack of confidence. Zeta Talk, December 15, 1996. In 1995, none of this was apparent, but today crop failures are admitted. The grain stores are depleted and food prices rising. Sinkholes are opening up and trains derailing for no reason, and factories exploding. Earthquakes are on the rise both in number and severity, and inactive volcanoes are erupting. The dollar is plunging and the price of oil skyrocketing, and now the world's markets have become shaky. Wait a minute. Weren't we told the economy was sound, jobs on the increase, everything on the up and up? Was that all a lie? Well, the short answer is yes. How did we get? First, the deficit. The U.S. was pushed into war with Iraq on a pack of lies, so that the neocons could be sitting on the oil fields when the pole shift arrived. Paper money may become worthless, but black gold would retain its value. So Bush has run up a deficit, essentially bankrupting the U.S. Second, the dropping dollar. Bush has sustained his deficit by selling bonds overseas to China and Japan and others holding U.S. dollars. But nobody has confidence in a bankrupt entity, so the value of the dollar has been dropping. It's all relative. The dollar in relationship to other currencies. This apple, for instance, used to be you could buy for a quarter. Now, as the dollar drops, it seems the price of the apple has gone up. Has the apple increased in value? It's the same. It is the dollar that has been dropping. The price of gold, when purchased on dollars, has been rising for this reason. It's not that gold has moved up, it's that it takes more dollars to buy gold. As the respect for the dollar drops, countries like China, who have been holding our bonds, begin to wonder if it's wise. Even with interest, the bond might be worth less at maturity than when it was purchased. So dollar dumping begins. But more importantly, countries selling oil have begun unhitching the sale of oil from the dollar, allowing the euro to be used, for instance. OPEC was only pegging to the dollar as a favor to the U.S., but times change, you know. So if those countries planning to buy oil don't need dollars to do so, the dollar dumping pace picks up. And the cost of anything purchased in dollars goes up. Well, why then are we told by the talking heads that inflation is low? Because items like food and gas and oil are not included in the calculation. Who thought up those rules? Another lie has been employment statistics. New jobs created. How do they know this? Do they call up the employers? Do they check the payroll tax accounts? Do they count the number of people paying income tax? Most of the statistics on new jobs are calculated from something called the birth-death formula. The logic is, if you're out there and still breathing, you must be working. In 1929, when the Great Depression happened, it was in great part due to stock speculation. Pieces of paper put out there and pumped up. This is terrific when it was a house of cards. So after the crash, new rules were put in place to prevent that. It would make it easier for the public to determine what the value of the stock was. You could look behind the stock to see inventory, trained workers, orders, how was the company really, what was the footing, the basis of the company, albeit there's still a lot of speculation. The .com, for instance, which is virtual value, but supposedly this was to prevent another crash. real things could stand behind a stock, and you could determine those real things. But then came the housing bubble, overpriced real estate. Bush needed to keep the economy booming so no one would notice we were bankrupt and he could stay in Iraq, sitting on the oil fields. So the housing bubble was born. Build lots of houses so lots of new construction jobs would arise and lots of construction material would be required and lots of income and sales taxes would be paid. But who's going to buy all those new houses? All sorts of people who don't qualify for mortgages and don't have a down payment. That's who. Thus they are subprime, less than grade A, so to speak. To lure these new homeowners, banks were allowing mortgages without down payments and at temporarily low interest rates. Remember when Bush was crowing about all those new homeowners? Hey, where was the government oversight? This bubble burst because of several things. The real unemployment increase caused many of those new homeowners to default on their mortgages. Balloon mortgages, where the interest rate was set to go up, made the mortgage payment unaffordable, and overpriced homes could not be sold readily in a flooded market. So foreclosures rose dramatically, and all those lousy loans packaged in pretty paper to investors around the world were exposed as worthless. For the Zetas, our financial system is what they call a paper promise. You buy a car, you sign a contract, you promise to pay. You get a bond from the government for your savings, they promise to return the money with interest. It's basically all based on confidence, trust. Now Bush wants to give you some freshly printed dollars so you can spend, 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 and drive the Dow back up so the illusion of worth is maintained. But U.S. citizens are drowning in debt from all the days when they were encouraged to run every credit card up to the limit and spend the equity in their homes. A recession and a dropping Dow is almost a given, despite the plunge protection team legally allowed by executive order to force buying and restrict selling on the Dow in order to maintain the illusion of worth. Remember that, Apple? If the dollar has dropped in value during the Bush presidency, then is a Dow at 14,000 today really worth 14,000? Or is it worth much less? In July of 2000, the Zetas predicted a crash on the scale of the Great Depression due to the housing bubble, but with a difference.